happening in Europe, I think, is a passive-aggressive slowing of the European economy. Now, of course, inflation continues to fall, so that's bad for the Europeans in as much as how they think about trying to eliminate the monetary policy. That's not going to change. What's happening in Europe is that the economy is slowing passive-aggressively in headline news, but it's slowing absolutely in inflation space. So what's going to happen here, I think, is that bond yields fall. When bond yields fall or continue to fall, you short the banks. That's the easiest thing to do in Europe. But look at the split, for example, on something like France. Like a lot of people, and I'd hate to remind the non-socialists out there of this very basic point. France is still France. Strap that on, okay? I mean, at the end of the day, there's no economic change in France. He's a young guy, but it's still France. They're aging at the fastest rate that they've ever aged, and they're socialists, okay? So at the end of the day, that is not new. That's not new, okay? What is new, maybe, is that people who bought the French stock market when Macron was elected, and again, my mom's French. I can use the French accent if I want, but I will not, because now I hear all these American pundits using these crappy French accents. I'll just call him Macron. You know, it's Macron. It's not. You know, what happens when this guy won? The CAC 40, which is the equivalent of the S&P 500 in France, is down 2.5% in the last month, Ben. That's terrible. You know what the S&P 500 is? In sharp contrast to that, in the last month, its S&P 500 is plus 1.7%. That is called USA kicking France's ass, and we will continue to economically. So again, that's a very important concept for you to grasp here. As Europe slows, don't buy France, okay? As US accelerates, buy USA.